When it's all said and done, we will have spent billions and billions of dollars, disrupted the global economy, lost American lives, to at best be in the same place we were before the war started. And I think that's the most optimistic view because there's a good chance we're in a worse condition. Hello again. Welcome to The Ruthless Truth. I am your host, Truth Davis. In this forum, I share opinions, thoughts, truths on a wide variety of topics based on what I believe to be a unique life experience. And you can read more about that in the bio or the notes. My intent is to share stories and experiences and hopefully provide some life and career lessons that will assist you on your journey. Please follow me on Instagram at TruthDavis5, subscribe to the YouTube channel Ruthless Truth, and there's also a Facebook page, Ruthless Truth. Journal format, I'll share some quick thoughts on current events or news items. Then I'll pick one topic and go deeper, which will be today's truth. And then I like to finish with an American history fun fact. Okay, so, wow, so much has happened in the past week. I don't know where to start. Well, I guess I need to start with the biggest headline, which is the announcement of a preliminary agreement with Iran to end the war. The president announced it this week. But as of this recording, no details have been shared. But apparently there is a 1.5-page MOU, which is a memorandum of understanding, where the U.S. and Iran agree to spend the next 60 days finalizing a plan. My very cynical take, when it's all said and done, we will have spent billions and billions of dollars, disrupted the global economy, lost American lives, to at best be in the same place we were before the war started. And I think that's the most optimistic view because there's a good chance we're in a worse condition. You know, as I very often say, few goals in life are achieved without a plan. And I still don't know what the plan was for Iran. Oh well, at least we'll be able to move on and maybe see lower gas prices. For now. Okay, I'm not going to say much about the president's birthday celebration this past weekend with the UFC cage matches on the South Lawn of the White House. Other than to say, I think it was embarrassing and beneath the office of the presidency and the grounds of the White House. And while I don't typically discuss sports on The Ruthless Truth, I do need to acknowledge a few major sports news headlines. First, congratulations to the New York Knicks for winning their first NBA title in 53 years. They defeated the San Antonio Spurs in 5 games, despite the Spurs holding a double-digit lead in each New York victory. I guess their youth and inexperience finally caught up to them, indicating they were not quite yet ready for the big stage. Also, congratulations to the Carolina Hurricanes for winning the Stanley Cup final over the Vegas Golden Knights 4-2. This is their second NHL championship, having won their first cup 20 years ago. And finally, the biggest sports event in the world kicked off in North America last week. The World Cup is the international men's soccer championship that takes place every 4 years. It is jointly hosted by 16 cities, 11 in the United States, 3 in Mexico, and 2 in Canada. This tournament is the first FIFA World Cup to be hosted by 3 nations, and the first to include 48 teams, which is an expansion from the previous 32-team format. And even if you're not a big soccer fan, if you have the opportunity to attend a match, I recommend going. It's not just a sporting event, but a multicultural experience like no other. Okay, let's get to today's truth. Today's truth. You know, I often reference the fact that I'm a licensed financial advisor. I actually have 3 licenses in financial advisory services, but because of the highly regulated nature of the industry, I'm significantly restricted as to what I can say on this podcast. Specifically, I can't make any product recommendations or provide any specific advice. However, what you may not know is that I also hold 4 insurance licenses. And over the past few years, I have purchased, managed, and then sold an independent insurance agency. So I have experience in this industry. Additionally, insurance is far less regulated than financial services, meaning I have more liberty to speak about insurance topics and issues. So in today's truth, I want to discuss insurance and provide some guidance to help you make choices for your personal insurance coverage. Now, before I get into specific insurance categories, I want to emphasize the importance of life stages. You know, as adults, we basically go through 4 life stages. Young adults or extended adolescence, which is 18 to 25-year-olds. Then we get into early adulthood, which is ages 25 to 40. Then the middle age years, 41 to 60. And then finally, pre-retirement or retirement years, which is 60 and older. Your lifestyle, career, family, finances, and health status vary greatly as you progress through these stages. The insurance needs of a single 25-year-old are very different than those of a 45-year-old married with kids. So as I proceed with this discussion, keep in mind where you are. Okay, let's start with life insurance. Only about 50% of U.S. adults currently have life insurance coverage. And why don't more people have policies? Well, there's several reasons, but the leading factors are they think it's too expensive, they think they don't need it, or they just don't want to think about or deal with the subject or possibility of death. Now, some people will try to overcomplicate life insurance saying, you know, it's also an investment vehicle or it's necessary for final arrangements. Listen, life insurance is quite simple and can be assessed by one simple question. If you die tomorrow, whose life will be financially screwed? The purpose of life insurance is to replace your income for the people who rely on your income to maintain their lifestyle. And again, it changes over time. I'll use myself as an example. When I was in my mid-30s, I was the sole source of income for a household consisting of a stay-at-home wife and young children in private school. If I had died, they would have been in a world of hurt. So I carried large amounts of insurance in my 30s and 40s. But today, I actually don't have any life insurance. My kids are grown and supporting themselves. And if I died tomorrow, financially, my wife would be fine. She has her own money and investments, and then she's the primary beneficiary on all my accounts. So I don't need life insurance. So where are you? If you have no dependents, you probably don't need life insurance. Now, here I'm primarily talking about adults under the age of 35. But there's one caveat to this point. The younger you are, the lower the cost of insurance. Why? Because excluding accidents, it's unlikely you will die before the age of 40. So the insurance companies want you because they get to collect premiums from you with a very low risk of having to pay a death benefit. So while you may not have dependents now, if you anticipate this situation changing anytime soon, it may not be a bad idea to get insurance now when you're young and it's affordable. Okay, let's assume you have decided to purchase life insurance. What kind should you get? Well, there are many variations, but the 2 basic options are term and whole life. Now, whole life, also called permanent life, is just what the name implies. The policy covers you for your entire life. Actually, Most policies coverage ends at the age of 100, but for nearly everyone, that is their entire lifespan. Additionally, whole life policies build cash value over time that can be used to pay future premiums or just to withdraw for cash needs. Now, the downside to whole life is that it can be 5 to 15 times more expensive than term life for the same amount of coverage. This takes us to term life. Again, the name is descriptive. With this type of policy, you buy coverage for a set number of years or a term. And when the term is up, the policy automatically cancels. Now, this is good for young families who don't have a lot of money but need coverage at least until the kids are grown. However, there is one key critical risk in term life insurance. If you are still in need of life insurance at the end of the term, it will be difficult and expensive to get a new policy. Let's say at age 30, you purchase a 30-year term policy. Well, at age 60, you will lose your coverage just as you are entering senior citizenship. And many insurance companies don't even issue policies to people over the age of 59. That said, most term policies will provide you with an option to convert to whole life. However, this option comes with time limits, such as by a certain age or within X number of years from the time that you initiate the policy. And be sure to shop around. Rates can vary greatly across insurance companies. Okay, next, let's talk about auto insurance. This is by far the most competitive category insurance because every state requires that drivers carry some form of automobile insurance. Of course, you probably already know it's popular given the amount of advertisement you see for car insurance. The top 4 carriers in the category spend nearly $8 billion a year on advertising. But who should you go with? How much coverage do you need? Okay, first, let's talk about your options for insurance carriers. In episode 34 of The Ruthless Truth, I discussed the importance of achieving a high credit score because it impacts so many aspects of your life. Well, one of those aspects is car insurance. People with low credit scores that pay much higher premiums as the insurance companies see them as riskier. Also, if you have a poor driving record, many of the major carriers won't even accept you as a client. So for auto insurance, there are 2 primary auto insurance coverage options: comprehensive and collision. Okay, collision provides coverage for damage suffered by driving into another car or object. Examples include rear-ending another vehicle, backing into a pole, or driving over a pothole. Comprehensive covers damage caused by incidents other than a collision. This includes hitting a deer, theft or vandalism to your vehicle, or damage from storms or a falling tree. Now, as you might guess, comprehensive is far more expensive than collision, often costing twice as much on an annual basis. So in making your choice, you need to consider where you live and how you drive. If you live in an area that has frequent severe weather or has a heavy deer population, you probably want to have comprehensive coverage. Now, this may be the reason that despite the higher cost of premiums, nearly 80% of Americans have comprehensive coverage. Now, the additional coverage options and features for car insurance are far too numerous to address here. But I will mention one key coverage option: uninsured motorist. This protects you from paying out of pocket for medical bills, lost wages, and vehicle damage if you are hit by a driver who lacks insurance or someone who flees the scene. I recommend including this in your insurance policy as there are millions of drivers who have no auto insurance. Now, the last type of insurance I want to discuss is health insurance. This is by far the most complicated and somewhat controversial insurance category. Did you know that medical bill debt is the leading cause of personal bankruptcy in the United States. Now, before I get into it, let me first say this. The state of healthcare insurance in the United States is embarrassing. It's expensive, it's hard to get, and it's an administrative nightmare. And while everyone knows it's a hot mess, the three groups who most can fix it seem to have no interest in doing so. And these groups are Congress, the health insurance companies, and the pharmaceutical companies. So don't expect anything to change or improve anytime soon. With that, what should you do about health insurance? Well, bottom line, you need to have health insurance. If you're one of the Americans who get it from your employer, consider yourself fortunate. This represents about 50% of U.S. workers. Now, the Affordable Care Act, or Obamacare, was intended to provide coverage options for the rest of us who do not receive subsidized care from an employer. And while it was always more expensive than employer-provided insurance, since January of 2026, when the government subsidies expired, premiums for the Affordable Care Act marketplace have increased significantly, with some plans nearly doubling in expense. So as a result, it's expected that up to 5 million Americans will choose to go without health insurance this year. Now, one of the best features of the Affordable Care Act is allowing adults to remain on their parents' policy until the age of 26. Everyone who can should take advantage of this, even if it means paying your parents for the premium expense. It's still the cheapest insurance you will find. And for younger adults, 26 and older, who have no dependents, you may feel that you don't need to carry insurance. Well, you are correct in assuming it's unlikely that you will contract a serious disease or health issue. But you know what? Accidents happen. And just one trip to the emergency room can wipe out your entire savings. So while it's a time-consuming and painful journey, I encourage everyone to invest the time to find some level of health insurance they can afford. Minimally, you should look for coverage that covers the large out-of-pocket expenses like hospitalization or surgery. You may be able to cover the cost of routine doctor or dental checkups yourself, but you want to have a backstop to protect you from financial disaster due to a medical emergency. A final overall comment when it comes to any type of insurance policy. Insurance companies do not want to pay, and that has always been the case, but today, even more so. I'm sure you all see the proliferation of TV commercials from lawyers telling you how much money they can get you from an accident that is not your fault. Well, this is resulting in an explosion of litigation and large settlements. And while this is great news for the few victorious litigants, it's not so good for the public at large. These verdicts increase the operating expenses of the insurance companies. And how do you suppose these companies plan to recover those losses? By increasing the cost of premiums to everyone else. So to close, in determining your insurance needs, you first need to look at your life situation. Do you have dependents or others that will be financially impacted if you pass away? Is your credit and driving record good enough to get auto insurance from a major company? Or will you need to go with smaller regional carriers who service higher risk drivers? And finally, how will you solve for health insurance? Because you really need to have it. Fortunately, there are several websites that will help you assess your insurance needs and the comparison shop to find the right insurance company for you. This is an aspect of your financial life that you need to take seriously and manage accordingly. Okay, let's get to today's American History Fun Fact. Today's American History Fun Fact. I want to tell the story of how a simple treat from Syria grew into a $24 billion snack industry, and how unfortunately and commonly, the actual inventor missed out on attaining great wealth from his creation. Okay, George Chaloub left Lebanon penniless and headed to America seeking the American dream. His dream was to pursue his passion of baking and confections and introduce the unique confections of Lebanon to America. After working tirelessly, in 1886, he was proudly able to open his first shop, George's Bakery, on Washington Street in Manhattan, New York. He soon shared his success with his son, Joseph, and then renamed his then well-established shop to George Chaloub and Son, Baker and Confectioner. There, they built a following for their fine handmade pastries and confection specialties. Well, in the 1950s, skyrocketing costs forced them to relocate to Brooklyn. And it was also in the 1950s that the Chaloubs introduced a new product that was instantly popular. It's a Lebanese treat known as amardine. Amardine was made from an apricot paste, which was handmade, pressed, dried into a sheet, and sold by the pound. People came from all around as word spread of this very special confection. It was known locally as shoe leather for its texture, and some also referred to it as fruit leather. As the business flourished, Joseph welcomed his own son, Louis, to the family business. Once again, in continuing this fine family tradition, they changed the name to Joseph Chaloub and Son. Louis was excited to join the family business and had visions for greatly expanding the enterprise. But at the age of 19, Louis was drafted to fight in Korea. Now, when he returned, with 2 Bronze Stars, mind you, his new vision was to launch and develop a wholesale business. So Louis and his wife devised a new approach for amardine, where they rolled it into thin sheets. Then they cut out circles that were hand rolled into a tight layered, silica form that was very similar to the fruit roll-ups on the market today. They called their new product Joret Fruit Roll, which is a combination of the names of Louis's sons, Joe and Ray Chaloub. And while the new product was well received and very popular locally, Louis was disappointed that the business had not flourished more. So in an effort to garner some publicity, he conducted an interview with a trade magazine that was writing a feature article on the Joret Fruit Roll. Surprisingly, Louis was very forthcoming in this interview, and in the article described in detail the step-by-step process of fruit roll manufacturing. That was probably a mistake, and Louis definitely regretted sharing so much information. Why? Because just 1 year later, a private label that Chaloub was producing fruit rolls for decided to make their own version of the snack. Then that company was bought by Knox Gelatin, which was purchased by Lipton. And that product eventually became the Sunkist fruit roll, the first major snack food of that kind. But the next player to enter the market took the category to meteoric heights. General Mills had been researching fruit-based products for years. They actually rolled out a fruit roll product in 1979, years before the Sunkist version. But it must not have been very good, as it was quickly removed from the shelves. Then after a few more years of reformulation, General Mills returned to the market in 1983 with the launch of Fruit Roll-Ups. The product was an immediate hit, and backed by a massive advertising campaign, became the category leader and arguably the category. So, what became of Joret Fruit Rolls, who pioneered this very category? Well, according to Ray Chaloub, after the launch of the General Mills product, quote, "We lost almost all of our supermarket accounts nearly overnight." So in an effort to remain competitive, the Chaloubs, who were observant Catholics, decided to go into the kosher market, where they achieved modest newfound success. Over the years, Joret has also produced private labels for international brands. For much of the 80s, they created Fruity Flips, the British answer to Fruit Roll-Ups. Joret also produced a line of South American fruit rolls in flavors like guava, papaya, and mango. And while fruit roll-ups are seen as a kid's product, ironically, the Chalhoubs never saw it that way. The Joret product was not originated with children in mind, and Joret still claims that it does not cater to children's taste. Case in point, one of Joret's original flavors, and in Ray's opinion, one of the all-time best, was prune flavor. Joret fruit rolls are still in production today, representing a modest business enterprise. As for General Mills, fruit roll-ups continue to be a huge seller, although they did experience some controversy. In 2011, the Center for Science and Public Interest sued General Mills over fruit roll-ups, saying that their packaging and marketing was misleading because it presented the product as nutritious, healthful, fruit-filled snack, despite having approximately the same nutritional profile as gummy bear candies. The lawsuit was settled out of court, with General Mills agreeing not to put pictures of fruits on the labels unless that fruit was actually present in that flavor of the fruit roll-up, and to either stop claiming that the product is made with real fruit or to include in that potentially misleading statement the percentage of the fruit roll-up that is actually made from real fruit. And these changes went into place in 2014. But the legal action did little to adversely impact their business, and fruit roll-ups continue to be a key driver of General Mills' multi-billion-dollar snack business. Okay, that's all I have for you today on The Ruthless Truth. Thank you so much for listening again. Follow me on Instagram at TruthDavis5. Subscribe to the YouTube channel, Ruthless Truth. There's also a Facebook page, Ruthless Truth. And I encourage all of you to review some of the past episodes that cover a wide range of topics, and I'm sure you will find something helpful to you. Again, thanks for listening, and I will talk to all of you soon.